richer than boomers, they also feel richer than Gen Zs. So remember, millennials are people between the ages of 26 and 41. They literally said that when they surveyed the millennials, 48% of the millennials said that they feel like they're wealthy. And this was fascinating because when they looked at whether or not they were actually wealthy, a lot of them really aren't wealthy. They found that actually, they said that to be wealthy in America, according to whatever standard they use, you have to have a net worth of about $2.2 million. I don't know the scientific basis for how they came up with that metric, but that's what they said. They said that the millennials that felt wealthy, their median net worth was about $500,000. And so effectively, what's really going on is they found that millennials, better than any other generation, better than the generation before them and the generation after them, understand wealth in its truest form, in the form that I talked to you guys about. They don't see wealth just as assets and money. They also see wealth as things like mental health. How happy are you? They see wealth in terms of experiences. Experiences are very, very big. If you have money and you're not enjoying it, you're not having these experiences that you're going to remember. It's not that much fun to just sit there and stare at your money and say, "Ooh, look at how much money I have." Like money can be applied. Money is a tool. It is a tool to live what I refer to you guys as a wealthy life. So effectively, it becomes a personal decision. And a lot of people during the pandemic started to actually pick up on this. That's why a lot of people, don't want to go to work anymore and stuff like that, because they're realizing things that I've been talking to you guys about for years, which is that, when you are sacrificed to the corporate plantation for life, where you're working more, you're spending more time with your boss than you're spending with your own kids, you're giving up about 100,000 hours of your life on this earth to these corporations that are not invested in you. So during the pandemic, people started realizing that. They said, wow, when I'm at home, I can really enjoy myself. I can sleep in, I can spend time with my relatives, I can do things I really love. And this is something, and I love the fact that everybody experienced it, because I've been saying it, even with my wife. I hope my wife doesn't mind me telling on her, but my wife had, she and I are both professors, as you know, and she took the kind of standard route of being a professor. Like, she works at a university. They don't hire Black people there. I don't think there's a single African American on the faculty except for her. And so she didn't understand. Like, I told her, I said, staying home from work every day is fun and it's great for my mental health, because I don't have to deal with crazy white people all day, or crazy Black people either. And I deal with good Black people, and people that I enjoy talking to. And I'm really happy with this. Even when I'm not making money, I'm very happy with it. And she didn't get it until the pandemic happened. And then she started getting used to using Zoom and started incorporating these new technologies into her life. And now she doesn't go to work anymore. Now she, if she can do it on a Zoom meeting, she'll do it on a Zoom meeting. We travel a lot more than we did before. And so ultimately, millennials have really tapped into something that I think is really important. I congratulate them for this. They said that 40% of millennials define wealth as well-being, not money or assets. 32% define wealth as how much money you have. 26% define it as how many assets you have. And then also they mentioned something else that I was kind of patting myself on the back, right there, to be honest with you, because I've been talking to you guys about relationships, and they literally said that healthy relationships were also a part of their wealth equation. And so when I've talked to you all before, I've said that your wealth, your quality of life is typically measured by health, wealth, and relationships. Those three areas are the three areas I think you want to pay attention to and really deep dive into to understand where you are, so that you can figure out how money can help you to enhance all those areas. So just keep that in mind. I'm telling you, you don't want to be one of these rich people who hates their life, or like some wealthy person who feels like, like they're stressed into the ground and life is terrible and all this other stuff, but yet you're supposed to be happy because you have money. Wealth is very, very, very psychological. Also, don't forget this too. Financial freedom is not how much money you have. A lot of people think that to be financially free, you have to have a lot of money. No, I would say to be financially free, you have to have a certain amount of money for sure. But that certain amount of money, that financial threshold that you must meet to be financially free, it varies from person to person. If a person has $12,000 a month in bills, then they need $12,000 a month to kind of start feeling financially free. If a person has 1,500 a month in bills, well, then their threshold of financial freedom is a lot lower. So always think about those thresholds. Little things like living below your means. That those are not popular ideas, but those are I heavily endorse that because that is also good for your financial health, or excuse me, your mental health financially as well. Because when you live above your means, it opens the door to something we've talked about extensively in the Black Financial Therapy Department in the Black Business School, which is financial anxiety. My wife wrote a whole book on financial anxiety and how to diagnose it, how to manage it, how to deal with it, all that stuff. Her website is coachingwithdralicia.com. It's coachingwithdralicia.com. So if that's an issue for you, you may want to get some help from a therapeutic standpoint, because the thing is, somebody could put more money into your pocket, but if your mind is not right, then your money will never be right. I don't care if someone could give you $1 million a day, and if your mind is gone, then your money's going to be gone too. And you're going to have more financial stress and anxiety because you're going to get more money. And then you're going to realize that with more money comes more expectations, more responsibilities, more problems, more challenges. So get your mental health right. Now let's jump into some other stuff that I saw that I thought was really interesting. Right now, there's a lot of talk about whether or not there's a recession coming, and so some people think that it is, some people think that it's not. The experts are a little bit divided on the recession talk right now. One of the things that I saw that was really interesting is that I saw one analyst who basically said that he does fully expect a what he calls a garden variety recession. Now, here's the thing about recessions in stocks. First of all, how many of you are invested in stocks? Give me a yes if you are investing consistently in the stock market. I hope that most of you raise your hand. Please raise your hand. If you don't raise your hand, then I need to beg you. I need you to go ahead and start investing like soon or now. Like if you don't, so if you can't raise your hand now, that's okay. Just promise me that you're gonna get your little app and you're gonna set some small amount of money that you're gonna automatically put into the stock market. You can do the $5 a day investing plan. That's on my website, boycewatkins.com. Very easy to do. You can put it into some sort of mutual fund. I'll even give you the ticker symbols of a couple funds that are good. One is VOO, Victor Oscar Oscar. The other one is SPY. So both of those funds will get you invested in quality companies and make sure that you're a part of all the economic trends that are happening in America. So give me a yes if you're investing now, or give me a double yes if you're going to get started today. I need y'all to get started now. Like, don't tell me you're going to start like next week or eventually. I don't care if you got 18 cents in your account. Take 12 cents and try to invest it. I'm kidding. I know 12 cents is not a lot of money, but really, it's seriously, if you got $5 extra, $10 extra, just do something and then set your auto deposit where you're doing something consistently. This is really important. The reason I'm nagging you about this is because as a person who has studied wealth and economics for 30 years, who's gone through all the data, all the research, all this stuff. I'm not just a stockbroker. I'm not some guy who just decided to become an online financial guru. I'm not a guy who made a couple dollars with a business. I'm not a guy who is an investment advisor. I taught people like that. I'm a professor who studies wealth the way a heart surgeon studies the heart, or the way a brain surgeon studies the brain. I studied in extreme detail, like where the money comes from, where the money goes, why some people have money and others don't, how some people go from rich to poor, how some people go from poor to rich, why Black people have more or less money than white people. I've studied it from every angle you can imagine, what it was like building wealth in the 1930s versus the 1950s versus 1970s versus 1990s. Like, I've seen all that. I've gone through all the data. And one of the things, the reason I'm pushing this on you and I'm forcing you to do this, I'm begging you to do this, is because this is literally, if you do this and you're consistent and you don't stop and then you don't sell, just don't sell those stocks, just keep them in your account. You do this over the next 20 years. I'm literally creating millionaires as I speak. I'm literally creating future wealthy Black people by getting you to do this. So that's why I'm begging you to do this, because I don't need you just listening. I need you to actually do something. Okay. So anyway, with that being said, the recession is supposed to get here. It's not a big deal. A lot of times recessions are discussed as a point of fear and everyone gets really nervous. And I understand that to some extent because during a recession, you might see things like a slowdown in hiring or maybe an increase in layoffs, higher unemployment, all that stuff. All those things are true for sure. However, as an investor in the stock market, one thing you will find, and this is something that is really important to remember, is that there is typically not always a direct connection between the stock market's performance and the performance of the economy. They're connected. Don't get me wrong. They are connected, but the stock market is a forward-looking indicator. What does that mean? That means the stock market is looking way in the future. The stock market is looking a year or two down the line. The stock market is not looking at what you're producing right now. They're looking at what the economy is going to be producing, 6 months from now, a year from now. So if there's going to be a recession, the stock market, a lot of times the stock market's like, oh yeah, I've been there, done that. We put that into the stock prices 6 months ago, right? So everyone else, all your friends who don't invest, are going to see the recession. They're going to see the headlines, all the fear, uncertainty, and doubt that gets created during that time. And then they're going to not understand why you're still making money over here on the left in the stock market. Well, it's because your stocks have already taken into account all the future expectations of what the economy is going to do. The stock market operates on information. Any information that indicates something that is supposed to happen with the economy in the next year, 2 years, 3 years, 4 years, the stock market is like it's the best form of artificial intelligence that there is because the stock market incorporates all that. It's like, oh yeah, I know that, right? So I would say to you that yeah, there is going to be a recession. There's the expectation. Somebody used the term cardboard box recession, which I've never actually seen that term used before. And I looked it up, and they apparently, one thing that they look at is the demand for cardboard boxes as an indicator of economic activity. And I thought that was so fascinating. So apparently that I'm sure it's been vetted through some research studies and stuff. So apparently there are people that think it's going to be garden variety or cardboard box recession. However, one thing you have to watch out for is the possibility of a liquidity crisis. A liquidity crisis is when you have maybe some structural uncertainty in the banking system, meaning banks get scared and stop loaning money, or they stop financing people's businesses, or they stop loaning people money to buy houses and things like that. And that can happen if there's a liquidity issue. That could occur as a result of this whole increase in the debt ceiling, because the Treasury is going to issue a lot of Treasury bills. And when they do that, what they're doing is they're reducing the money supply. So they start selling these Treasury bills so they can raise money. Well, they're raising money by sucking money out of the economy, the same way you might suck water out of your rug with one of those funky vacuum cleaners that gets the moisture out. You know what I mean? So they're sucking liquidity out of the economy. So that could be an issue. And that does create a different dynamic. That creates a lot more uncertainty and a few more economic problems. If I see any indicator of that, I will let you know. But right now, I'm feeling really good about this stock market. Last night, I met with you all that are in the Prime program, and we were talking about stocks you can use to generate income, consistent income by selling the options. And I'm gonna tell you, there's so many opportunities in terms of ways to make money. And I was talking to you guys about. So I showed you all the portfolio that I had in terms of moves that I made with Amazon and Chipotle. And what was fascinating about that, I used stock options to basically accelerate the position because I was so clear in my head that Chipotle and Amazon, as well as a few other companies, were going to do really well over the next year and a half. Well, I gave myself a year and a half. I created an options position that gave me a year and a half for those stocks to go up. Well, they didn't take a year and a half. They literally shot past the strike price within about 6 weeks. So now I have the positions. I just had to hold them to get all the money out. But for the most part, that was just easy money because that was as easy to predict as predicting that the sun is eventually going to come out again on a rainy day. So there's so much money out there available. And so if you are invested, I encourage you to remain consistent. What I'll also cover are some other trends I've noticed in terms of areas that you may want to put some money in order to do well. And by the way, if you want to join us in Prime class, just go to drboyceprime.com. Some of you are already in there. If you're not in there and you want to see what we're doing and how it all works and all that, just go to drboyceprime.com. And it's good for anybody that wants to figure out how to make money from your stocks without selling them. Okay. Now, Darlene, you're asking about the link for the Prime class last night. If you had trouble getting in, there were a lot of you there last night. There were a couple hundred of you there last night, and the recording will be made available. I'm going to load that in today. If you could not get in or something was going wrong, or you have any issue at all in the Black Business School, just email support. Write this email down. It's support@theblackbusinessschool.com. Support@theblackbusinessschool.com. They can take care of you and make sure you get what you need. I don't know what happened with the link. I know I sent the Zoom link out a couple times to everybody that was in the class. So if you didn't get it for some reason, I don't know what happened, but I know that a lot of you were there last night. So and the recordings are always available. So drboyceprime.com if you want to take a look at that. All right, so here's a couple more things I read that was really interesting. So right now, a couple of things that could really accelerate this market increase is one's related to the Federal Reserve. The Federal Reserve's been increasing interest rates for a while. That's been pushing down stock prices for a while. So the Federal Reserve doing what they've been doing has been just an absolute dampening effect on your stocks. And so what's expected is that this year the Fed's just going to stop. They're going to stop the beating, which is going to stop the bleeding. And once they stop, there are some who believe that they may even pivot. And instead of increasing interest rates, they may actually start reducing interest rates. Based on most indicators, if they start doing that, or when the news comes out that they're planning to do that, that's going to be just a bonanza for your stocks. If you pay attention now, if you look at some of these companies that have been making ungodly amounts of money so far this year, you look at a company like Facebook, for example, or Meta, I guess that's what they're called now. If you look at Meta, let me see if they confirm what I'm thinking here. Yeah, if you look at Meta, right? Meta has, I'm going to share this on my screen. Meta has had a return of 119%. That literally means that if you've been investing consistently in Meta, you doubled your money. And that's easy money, right? You didn't have to go to work to get this money. All you have to do is take the, a little bit of extra money that you were going to spend at the club or on shoes or whatever we spend money on, and put that into the stock. And so you doubled your money this year. So that's pretty impressive. But what you'll notice here is if you go back and you look at this is the stock for 2023. If you go back a whole year, you see literally Meta was kind of in a valley. The reason that you got this massive return is because sometimes the most money that gets made in the stock market is not when the stock market is up. The most money that gets made is when the stock market is down, and you buy when it's down, and then you make money on the way back up. So Meta dropped into a valley. Their stock was getting pummeled. If you go back and you look at the 5-year ROI, you made 40%. So if you're a long-term investor, you did well. But you see the stock was as high as 378. It dropped all the way down to 90. So you were able to, at one point, buy a stock that previously sold for 378 for $90. Why don't people do that? Well, a couple of reasons people don't do that is because, number one, you listen to people that just don't understand anything about money. You listen to broke people who've never invested, who tell you that the market, this is proof that the market's going to crash and everyone's going to lose all their money. And then we get scared and we don't invest because we're thinking, man, it's dropped to 90. It could keep dropping, right? And that's always a possibility. That has happened before, but it doesn't happen very often with stable, strong companies. The other reason that a lot of people didn't make that move is because I think that in the middle of all the chaos of sort of seeing everything decline and then wondering if it's going to keep on dropping, there is a fear that kicks in where you sort of say, let me get my money out before I lose more. And this is what they might call a wealth effect, or that's one term that's used. The wealth effect is when you're watching your 401k bleeding and you're just feeling like crap and you're just like, oh my God, like I got to take my money out before it gets worse. And so this is where investor psychology comes into play. Again, this is why we started the Black Financial Therapy Department in the Black Business School, where we partner with the best Black therapists to help us understand barriers that keep us from building wealth. When financial anxiety creeps in, you end up making horrible investing mistakes. The two emotions that cause people to lose the most money are fear and greed. When you get scared and you start selling, or you're afraid to invest because you're afraid, then you're not gonna make money. Scared money doesn't make money. And then if you are too greedy, meaning that when times are good, like they were back in 2021, and the stock's trading at 376, you had people leveraging up. You had people thinking, oh, it's been going up, up, up. Well, it's going to keep going up to heaven. It's going to keep going up to the sky. And so my goal as an investor is to typically just maintain balance. That's it. I try to maintain balance. I have a friend that's a rapper named D1. He's actually at Harvard University now, and he has a whole album called Finding Balance. And maybe that's why we're such good friends, because I believe in balance. So balance means that if you're trading up here, where prices have been going up, 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 the first thing I'm always thinking about is the opposite of what everyone else is thinking about. So when the stock is going up, 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 everyone's getting excited. There's a frenzy. There's an emotional high because everyone's making money and everyone's thinking, oh, it's only going to keep going up from here. This was in the middle of when NFTs were just taking off like crazy, and just these amazing, unbelievable things were happening. It was kind of just chaos on top of chaos. Well, my thought was, okay, this is a good opportunity for me to protect what I've made. Right? Instead of me counting blessings that I have not yet received, I count the blessings that are already in my pocket. Instead of looking at all the birds that are in the bush, I look at the birds that are in my hand. And I say, how do I protect the bird in my hand before I go after the birds in the bush? So there are ways, if you're a good investor, to position yourself to take advantage of future increases should they occur. But there's also the first order of business when the market is just blessing you in this way and putting so much money in your pocket. Your number one order of business is to protect what you have, right? So this is where, when everything's peaked out, this is where you put your stop loss orders in place. This is where maybe you buy some put options to protect yourself from the downside. This might be where, remember, we were selling call options at this time, right? And making lots of money doing that, right? This is where you become more of a seller than a buyer. Okay, because again, the fundamental, most basic thing that the data of stock market history shows us is that when things are really taking off, you don't really want to be a big buyer, because you could become a big sucker. Warren Buffett is not a big buyer when the market is doing extremely well like this. At that time, right around then, right around this point of this peak, that was when I told my wife, I said, let's take a couple $100,000 out of our stock portfolio now. Let's sell some stocks and go buy some real estate. And that's what we did. We bought a house in Atlanta that we rent out now, right? And that was driven by diversification. And it was also driven by the fact that I felt like the frenzy could not keep going on forever. So then what emotional discipline does is that, okay, so you see it drop, right? So it drops from 378 to 324. It looks cheap at 324. So you say, okay, well, my rule of investing is I buy low, sell high. So it's dropping. I'm on a dollar cost average. I'm going to keep buying as it gets cheaper. And then it drops even more and even more and even more. And you're getting more and more devastated because you're waiting for your ship to come in. You're waiting for all this hard work and discipline to pay off. It ain't paying off. It's dropping, but you stick with your policy. Okay, I'm buying more and I'm buying more and I'm buying more and I'm buying more and I'm buying more because I believe in this company. And the whole time from here down to here, from the peak of 378.6 down to the low of 90, I'm feeling like an absolute bum. I'm feeling completely stupid. I'm getting angry. I'm getting anxious. I'm feeling very upset. This is all your financial anxiety kicking in and all these other emotions that we talk about in the Black Financial Therapy Department. We've got therapists. We can help you with these sorts of things. So I encourage you to really think about this. Well, eventually though, remember your big ally and your enemy in investing is this thing called time. And I call it your ally because if you give me enough time, I can do anything. Anybody in this room, if you gave me enough time, if you said, turn me into a millionaire and you give me enough time, I could literally formulate in about 3 minutes an economic plan that will put you in millionaire status. It's very easy to do. It's as easy in my mind as it would be if you told me to drive my car to California. I could easily drive to California. But if you give me 8 hours to do it, I can't do it in 8 hours. But if you give me like 8 weeks, oh, that's easy. That's a piece of cake. Okay. So time is your ally in that regard. That's why you don't waste time. You do not waste time. You cannot. You got that newborn baby. This is where B1 people become the wealthiest people on earth. This is where we lead the world financially by the year 2070. You got that little baby. You start investing for that baby now like your life depended on it. Love your damn kids, and don't just love them with hugs and kisses and free food. Love them by investing for them and helping them protect them from corporate slavery. I don't want any of my kids to ever have to work. If they want to work, they can, but I don't want them to have to work. So I'm going to help them prepare. right? So you got to prepare them. Don't do to them what your parents did to you. That's unfair. That's wrong. That's abusive. They didn't know what they were doing. They didn't know they were abusing you, but they were, because you know how miserable you were when you had that job that you didn't want to go to, but you had to do it because you had student loans and you had no assets. So don't do that to your children. The other thing about time is that the reason I consider time to be an enemy is because time is going to move at its own pace. And so here you're just sitting here and you're like, okay, well, Dr. Boyce said be consistent, and I like this company, I like the management, but yet it seems like every time I keep putting money in here, it gets worse and worse and worse. And then you've got these naysayers in your ear. Y'all know what I'm talking about. I call them the Negro naysayers, who are just constantly telling you, like, see, this is why you shouldn't have done it. This is why you're stupid. This is why you shouldn't be listening to those people. This is and it's kind of playing on you. It's kind of making you feel a certain way, right? And so time is kind of an enemy because you don't know when things are going to turn around. Like I was telling you all, when I was making my consistent investments in Amazon, I did it because my goal is to be a solid investor and a solid human being. And now the way I define solid is consistency. Like, again, even when I do stuff publicly and all this other stuff, there are people that love me and people that hate me, but they will never accuse me of being inconsistent. They will never accuse me of flip-flopping. If you love me, you love me consistently. If you hate me consistently, and I'm okay with either one of those things. I'm actually going to be on Tasha K's show today, and I know she's going to ask me about some of the people that are mad at me or whatever, and I'm okay with that. I'm okay with being hated or loved. It's fine, because I'm okay with who I am. I've chosen that as my philosophy. So what that consistency means in investing is, if I like a company, I just like that company. If I think the management is good, then I think the management's good. Yeah, that means I'm sticking with it. I stick with the company the same way I stick with my wife. I love my wife on the good days. I love my wife on the bad days. I love my wife in sickness. I love my wife in health. I love my wife when she's rich. I love my wife when she's poor, right? Because that's the horse I chose to ride. Not that my wife is a horse, but you get the point. Okay, so my point is to say that if you have a company and you just believe in that company, and I've mentioned to you all, again, every single week, if you log in at theblackbusinessschool.com, look under what Dr. Boyce is buying, and you'll find these stocks that I pick for you guys a lot, and I tell you which ones are my favorites. The stocks that I tend to pick are companies where I just believe in the management. Like, I just believe in Amazon's management. I believe that whatever the economic conditions are, they're going to figure it out. They're going to figure out how to make money in those conditions. I believe in Microsoft. I believe that company, that if that company goes down, they're not going to stay down for long. So by picking that philosophy and being consistent, that is part of what gives you that ability to remain resilient, even as you watch your stock price start to dwindle. Facebook was dropping. I'm not going to put Facebook in the category of Microsoft or Amazon, because I don't know how. I like Zuckerberg, and I did invest in Facebook, and I benefited from the rise, but I don't believe in him the way I believe in, say, Microsoft. However, if this is the horse you choose to ride, then you ride that horse. You remain consistent, and time becomes your enemy, because you don't know when the right time or when things are going to actually turn around, or when your hard work is going to pay off. And so with Amazon, the investment move that I made with Amazon was one where I said, okay, I want to make a move on Amazon options, and I want to use options because options give you the ability to accelerate your ROI, right? You can double, triple the amount of money that you might have made by owning the stock. And but I don't know what time this is going to happen. So what I did was I picked those call spreads, and I gave myself a year and a half for it to happen, right? So I didn't give myself an infinite amount of time, but I gave myself a pretty long amount of time, because I figured that in a year and a half, whatever's happening with the economy was going to work itself out, and Amazon would get back to the business of being profitable again. And that worked out. Other companies where it really worked out with were, if you look at Netflix is another stock that was pretty much a fallen angel. You see Netflix has been absolutely astronomical in the last since the start of 2023. In fact, Netflix has made 46% as an ROI. In the last year, they've made 154%. Now, if you look at the 5-year trend of Netflix, though, you see Netflix used to be $664. They dropped as low as $180. Again, but if you believed in Netflix's management and you kept buying as it was going down, and then bought into the dip, then you could make a ton of money right here. Okay, so basically, what I would say to you is, one way to keep yourself from going crazy as an investor is to kind of pick a philosophy and stick with it. That's the point. Don't go chasing waterfalls. Don't go chasing trends and having FOMO and being wishy-washy and moving back and forth. Be fundamental with it. And that's what tends to build wealth over the long term. Okay. So someone asked about Anthony's asking about Tesla. What do I think about Tesla? I think Tesla is, gosh, they're just like a magical company. I think they have a lot of key man risk because of Elon Musk. If Elon Musk just dies of a heart attack or falls in the shower, then Tesla stock plummets. But I think generally speaking, assuming that doesn't happen, they just seem to be ahead of the curve on so many areas. And they just made a big EV deal with Ford. Speaking of that, I think electric vehicles is a massive, massive income generating opportunity. If you log in to blackbusinessschool.com, I did put some EV stocks in there that I think you may want to take a look at. Also, ChargePoint is one that I'm invested in. They're going to start putting all these EV stations, all throughout the United States. And this is going to be this is an interesting thing. We've been talking a lot about this in the Black Business School for a couple of reasons. One, because I think it's a massive investing opportunity. I think EVs are just going to grow. To give you some context, there are 40,000 EV stations in the United States right now. There's about 4 million in China. So it's going to be a massive investment in EVs or EV infrastructure over the next, say, 10, 15 years, a massive ecosystem. Also with EVs, I think just generally speaking, a lot of the EV stocks, I don't know about picking the winner. I don't know if you want to try to pick the companies that are going to win the EV race. I would prefer to look at things like mutual funds that focus on electric vehicles. But EVs are interesting. Oh, the other reason that the electric vehicle charging station move is interesting to me is because I talked to a brother who's going to be at the All Black National Convention. By the way, if you're not coming or if you're interested in coming to Atlanta to meet up with us, we're going to be at the convention October 20th at the Marriott Marquis Hotel. If you go to allblacknationalconvention.com, you can join us. It's so much fun. It's like a big family reunion, but you learn so much. You get to network. You can form investment clubs with the people you meet. It's the biggest B1 gathering on the planet, and so it's not just a Black convention. We don't invite people just because they're Black. We don't care about celebrities, but we do have millionaires and billionaires and the CEO of the Air Jordan brand, Larry Miller, was there last year, and so we have a lot of really quality Black people there. We're not trying to just bring in some rapper because he sold 10 million albums rapping about dope, or bring in some celebrity just because he's on your favorite TV show. We look for people that are intelligent, that add true value. And one guy that's going to come in, his name is Cedric. I don't have his last name, but Cedric is really interesting because Cedric was in the music industry and he left the industry because the industry is just kind of full of a bunch of debauchery, and he got into commercial real estate. So Cedric is very wealthy. He's made millions in commercial real estate. He also owns a pickleball team. Pickleball is actually taking off. That's becoming a big trend. I was talking to him about investing with him in his pickleball team because I just hear everybody talking about pickleball. And anyway, one thing Cedric told me that I wanted to share with everybody, and this is something that we're trying to dig deeper into in the Black Business School with a partnership we're doing, is he said one thing that he found out was, he said, first of all, when we're doing our projects in real estate, we have the hardest time finding HVAC people, electricians, and I think he said carpenters and plumbers, right? And he said, Doc, he said, if I were you, man, I would talk a lot about getting these skill trades, because these HVAC, electrician, carpenter types are making more money than doctors and lawyers now. Especially if they know how to become entrepreneurs, they can start their own businesses. They make an insane amount of money, or even working for somebody, you can make an insane amount of money. He said, we can't find enough people to do the projects that we have. And he said one electrician told him that because they're building so many of these electric vehicles or EV stations, the Biden administration is going to suck up all the electricians over the next few years. He said, so there's going to be a massive shortage of electricians in the next few years. So some of you may have kids that are going to be going to college soon and stuff like that. And I think college is great. Our kids are going to go to college and stuff like that. But I think it's very important to make sure your children have a skill. Going to college does not give you a skill. Going to college will give you a piece of paper. It can give you a skill, but it doesn't mean you're going to get one, right? So if you go to college, you become an accountant, you've got a skill. You become an engineer, you've got a skill. You get a degree in business management, I don't know if that's really a tangible skill. Like, okay, give me something to manage. That doesn't really, and I'm making fun of myself because actually one of my degrees was in business management. I had three majors. I got 2 bachelor's degrees and 3 majors in finance, economics, and business management. And I just tacked on business management because I'd taken a bunch of classes and I just threw it in there so I could do something that I thought was impressive at the age of 21. But now I don't care about stuff like that. But anyway, so we're actually going to partner with some people that we know to offer some certifications in those skilled trades, because I'm firmly convinced that there is a spike in the demand, a reduction in supply. I think that's also an area where the public school system is selling people short. There was a time where you could go to high school and get a trade, but now for whatever reason they decided that college was just the thing for everybody, and I don't agree with that. I think college is great. Don't get me wrong, but I think that there's so many other ways to make money if that's what you're trying to do. So that's one of the things I noticed with the whole EV phenomenon. A couple other pieces of information I'll share with you, but actually, let me answer a couple of your questions. Let's see here. Someone says, how much money do you need to get started with options if you don't have that much money? Well, to buy an options contract, you have to have 100. You have to do every contract is for 100 shares. So if I buy an options contract, if I'm a buyer of a call option or something like that, then that means that whatever the price is, if the price is $2.50 per share, I have to pay $2.50 times 100. So $250 is what that contract's going to cost me. If you're talking about selling call options, you have to own 100 shares of that stock to sell a covered call. So that means that the stock is $7 a share. I have to put up $700 to own 100 shares, and then I can sell options on those shares. The way to visualize it might be like if you own a plot of land and you have to buy the land and then you can rent the land out. Or if you have a cow, you can sell the milk. Or if you have a chicken, you can sell the eggs. That's how I view the options that I sell. That's how I make the bulk of my money. Is I just sell my stock options on the stock I own, and I do that every single week. And so that's the amount. So you don't need a ton of money to get started, but it does help to have a capital base. So if parents were to ask me, what's the best thing to give a child that you want to make money, or what's the best way to make yourself into a high earning individual, I would say develop a capital base. What is your capital base? So there are different types of capital. There is financial capital. That's easy. Having money. If you have money, it's easier to make money if you have money. We know this, right? But other forms of capital are things like human capital. Human capital is a skill, right? So if I am a person that went to school and I learned how to become a lawyer or a dentist or an HVAC expert or a plumber, well, now my human capital is higher. I can go in as a plumber and say my fee is $200 an hour or $300 an hour. I can't say that if I'm unskilled. So my human capital is higher, and I can make money by selling my time, which is very similar to making money by selling options on the stock you own, right? Because the stock is capital. So when I sell options on my stock, I'm basically, it's no different than if I were a plumber selling hours of my time. The big challenge there is that there's a point in life where I don't think you should be in the business of selling time for money, because time is a limited, scarce resource. You have limited, scarce resources like time, your health, things like that, and we will sell those things in order to get money. And I think that really moving away from those sorts of economic models is really not just the key to wealth, but it's just the key to happiness, the key to fulfillment, the key to freedom, right? So if you want to help your kids out, give them a capital base so that they don't have to actually sell their time for money, or and even worse, you have people that actually sell their body for money, because your body is capital too, right? If a lot of people want to sleep with you, you can say, well, give me $100 and I'll sleep with you. That's why prostitution is the oldest profession in the world, because that's human capital that God gives you, when you're born, and you can, and if it's valuable, then you can rent that to other people. But the cost of that process is very high, right? So anyway, but the fundamentals are the same. Let's see. Beverly says, how do I sign in? I don't know what you mean by signing in. Are you talking about at the blackbusinessschool.com? If you go to the blackbusinessschool.com, you should have some login information. If you have any issues or anything that you get stuck on, just email support@theblackbusinessschool.com. They can take care of you. Let's see here. Rain Pearson. Good morning, Dr. Boyce. How do you know if a company has good management, and how do you research to learn about a company's management? A good way to research a company, honestly, is to look at what the analysts are saying about the company. And also, if you look on Robinhood apps and stuff like that, they'll give you what they call the bull and the bear case of a stock. Every stock has good things about it and bad things about it. So you can kind of read all that and kind of get a sense of what you think about it. And then generally speaking, there are companies that are just kind of known as like the best brands, like companies that we studied in terms of understanding how to operate the Black Business School. As we looked at some of the best run companies in America, like Costco. The best companies in America in terms of quality management, in my view, just right off the top of my head, would be companies like Costco, Starbucks, McDonald's, Chick-fil-A. What's another one? Microsoft, of course, in the tech space. I think Amazon's okay. They kind of made some mistakes recently, but I like them. Um, so you kind of know Nike. Nike does a good job. They know how to make money. So so if you have a company that knows how to make money and their stock price takes a temporary dip because the overall economy is bad, that tends to be almost like an easy money, because a lot of times Apple's another good. Gosh, Apple, sheesh. If you Apple stock, it has gone up 300% in the last 5 years. So imagine if everybody just made a commitment that for every dollar I spend on an Apple product, I'm also going to buy some Apple stock. That right there would put so much money in your pocket. It's ridiculous. What about Block? I don't know about Block. If you log in at the blackstockmarketprogram.com, leave that question for me next week and I can look it up for you. But I don't know about every single stock. So but if you leave the question, I can research it for you. Camellia says, can you only sell in 100 block chunks, or can you sell in 150 block chunks? It's 100 block chunks. So an options contract consists of 100 shares. So if you buy an option, you're buying 100 contracts, or on a contract on 100 shares. If you are selling call options, you sell in 100s. So pretty much all the numbers get multiplied by 100. Let's see. Can you give me some charging station stock to look into? Says Rarick. Yeah, ChargePoint. ChargePoint's one good one. There's some others out there. There's also mutual funds. Kathy Wood at ARC, I think, does a good job of kind of following the EV space pretty well. So I like what Kathy Wood does. You know what? And so if you ask me about an individual stock, I won't have an answer for you. So I apologize for that, because I don't have, there's thousands of companies, so I haven't had a chance to look into all of them. But if you log in at theblackstockmarketprogram.com, there's a link at the top where you can leave your question for me, and I will answer your question during class. Or sometimes I'll just do a video and just answer a bunch of questions in a video and send it out to the students. So if you have a specific question for me, you can do it that way. If the questions for today, if you leave them in that general space of what's going on with markets or investing, I can answer that. But if it's like, what about this one company? Chances are I don't know anything about the company, because again, there's like, I forget how many thousands of companies that are publicly traded. So it's hard to know every single one of them. It's impossible, actually. All right. So anyway, let me hop in and mention a couple more things that I noticed today when I was going through the news. So don't worry about the recession. When people start talking about it, it's not a big deal. One other thing that's really good is that inflation is starting to decline. The CPI numbers came out, and it turns out that inflation was at the slowest. It rose at the slowest rate it's risen in 2 years at a 4% annual rate. 4% is good because they're getting closer to the benchmark inflation rate that the Fed aims for. Their target inflation rate is about 2%. So 4% is still pretty solid. If they maintain at 4%, that means that the Fed is going to back off and stop beating up your stocks. So that means that, generally speaking, it's going to start taking off again. Coinbase is on my mind too. That's a company that you guys know. We've talked about that in the Prime program a lot because that's a great income generator for selling stock options, stuff like that. And Coinbase right now is under investigation by the SEC for allegedly running an illegal exchange. I don't believe that the suit has merit, but it did push down the price of Coinbase temporarily. But remember, this is why you have put options in place. Whatever you're invested in, you always want to think about insurance. Like, just like if you buy a building or you buy a car, you always buy insurance. The put options are your insurance. So again, don't let greed cause you to forget that in investing, things can easily go wrong. They can easily go south. It's a myth to believe everybody who invests consistently is always going to have money. They're always going to be making money. It's not easy to be an investor if you can't deal with some of those ups and downs. So you want to go ahead and put money into protecting yourself from some of those things. Let me see here. One other thing that was interesting to me. And by the way, I'm going to be speaking this week. If you want to meet in person, I'll be speaking out near the O'Hare Airport. Actually Thursday. Today's Tuesday. Yeah, Thursday. I'll be speaking for an event for JJ Conway. So if you want to come out for that, you can go to boycewatkins.com. And then July 8th, I'll be in Seattle speaking. I'll do a 4-hour deep dive intensive there. So if you'd like to join me in either one of those cities, just go to boycewatkins.com. You can get your information there. All right. So let me see here. One other thing that I noticed that was interesting is San Francisco, like a lot of major cities, are having this weird exodus of businesses and a really big dip in their commercial real estate market because of crime. Apparently, Home Depot and the Westerfield Mall the Westerfield Mall shutting down in San Francisco, and Home Depot, I think, was shutting down some stores or leaving or something like that. And I know it's also happened in Chicago. So apparently, there's this crazy crime thing happening right now where I guess people are just running into stores and taking stuff, and there's no response to that. Like the police don't care and the store clerks don't care. So a lot of companies are actually losing, billions of dollars because of this. So as a result, San Francisco was kind of ground zero where a lot of businesses are leaving San Francisco. And I saw an extensive discussion about it. So I wonder how that's going to affect things politically. But that's just kind of like a little factoid in terms of what's going on with the economy. All right, so let's see here. Gregory says, is it a good time to invest in real estate stocks? And what good ones do you know of? Yeah, I think real estate investment trusts especially are a great way to invest in real estate without actually having to buy property. A lot of people think that you have to go buy real estate and do all that paperwork and all that extra landlord work in order to invest in real estate. That's just not true. You can get on your app and become a real estate investor on Robinhood. So go on Robinhood, look up REIT, Real Estate Investment Trust. A bunch of options will come up. Some of them pay dividends. I can't remember which ones I'm invested in. I can look it up. If you log in at the blackstockmarketprogram.com, leave that as a question, and I can give you a specific list of the ones I'm invested in. But I don't know. I just know that when I wanted some real estate in my portfolio, that's what I did. I don't like being a landlord that much. I just don't. It's not that much fun for me because it takes time, and my time is the most valuable thing that I own. And I don't like wasting time on stupid stuff. So, we just constantly have these little issues we got to deal with the property manager with our properties. And it's not the money part that bothers me. It's really the time. Like, I'm not a detail oriented kind of person in that way. Like, I don't want to sit around and go through a bunch of paperwork and have to remember deadlines and dates and little things. So I own property, but I'm not going to buy any more. If I want to invest more in real estate, you can just put your money into a real estate investment trust and let them do all the work. Let them have all the headaches and stuff like that. And then really, again, selling stock options is a better ROI on your money anyway. So if I have extra money, I would just, and I wanted to be safe, I would do something like, I don't know, if I bought like 1,000 shares of like Microsoft, I could literally make, which 1,000 shares of Microsoft would be about $331,000. On that 1,000 shares of Microsoft, I could easily make, several $1,000s a month, right? Just by selling the options on Microsoft stock. So compare that to property. If I bought $330,000 worth of property, a $330,000 unit or house or something, maybe I'll make, 2,000 a month if I'm lucky, 3,000 a month if I'm lucky. I have a $700,000 property in Atlanta. We make about $3,500 a month off that in rent. And then that doesn't include expenses and everything else. So something breaks down, we got to deal with it and all the headaches and all that. So really, when I'm grabbing that next several $100,000 to invest, I'm not putting it in real estate. I'm going to just buy some stock and sell the options because it's headache free and it's easy to do and the money's better. So, so you may want to look into that. I think that's a great way to make money that a lot of people don't talk a lot about. So again, that's all we do in Prime. So if you want to join the Prime program, just go to drboyceprime.com. You can feel free to take a look at that. Also on my website, boycewatkins.com, I have a training there called How to Make Money Without Working. So you can feel free to take a look at that. And that's where I kind of introduce you to the process. So it's all on my website. All right. So let's see. Gregory says, how long does it take for your stocks to return when you sell the option and it expires? When you sell the option, it expires. Well, the thing about selling options is you instantly get the money. Like the money instantly goes in your account. So there's no amount of time you have to wait. Now, the amount of time that you sell the option for can vary. Like you can sell a longer term option, but remember, time is an asset and a liability. So if you sell an option that has more time attached to it, you're going to get more money, but then you've sold time, which means you have to sit on that stock for that whole entire time. You can't, just so you can't sell that stock. When you use an asset for collateral, you can't do anything with that collateral. That collateral just sits there. So that's why I sell my options for a week at a time, because I don't want to sell that much time. Let's see here. Rarick says, I'm a master welder and I'm teaching kids how to manage or how to MIG weld and TIG weld. And I want to teach them about the stock market. How would you go about teaching them about it? Teaching teenage Black kids. You know what, Rarick? First of all, congratulations. You sound like a very smart man. I love the fact that you're teaching kids a skill and you're also thinking about investing. And the reason I admire you and respect you immensely is because you don't understand. You're really saving a family when you do that. When you give a child a skill, especially, you look at so many so many young people out here that have no skill, and then they have kids and have no ability to take care of them. Think about how devastating that is to the child. How terrible that is, what that does to families and all that. And it's so toxic and so terrible. And you just have, guys with 18 kids and all this other craziness, and everybody acts like that's normal. And I just see 18 kids that aren't getting what they need. And next thing you know, they become criminals or go to jail, just whatever. And then on top of that, they're emotionally damaged, like beyond belief. So when you're like helping that young man get a skill where he can provide, like that's enormous, that in terms of what you're doing for those children. So that's the first thing I'll say. The second thing I'll say is that if you want to teach them about the stock market, and this is really true for any parent that you love your kids enough to teach them things like this, don't overcomplicate it, right? Don't overcomplicate it. All you got to do is do basic stuff. Okay, start with the story I told you guys about the monkeys. Remember, I told you all about the book A Random Walk Down Wall Street, where Burton Malkiel basically showed monkeys how to invest by throwing darts at a wall. And these monkeys were not analyzing, the darts. They were not analyzing the stocks on the wall. They just threw the darts at the wall, and wherever the dart landed, that's the stock that they would pick. And what they found was that even the monkeys were able to make more money than people who don't invest in the stock market just by being in the game. Literally, by just being in the game, you're going to have more money than people who are not in the game at all. As long as you're not doing anything crazy. Like if you're putting all your money in Dogecoin or something, all bets are off. But if you follow that basic rule of just spreading your money out and diversifying, and you do it consistently, you're going to have more money than people who don't invest. It's almost impossible in America, actually, for your wealth to keep up with inflation without you investing. You can't work your way to wealth. It's impossible because wages are going down and the cost of living is going up. And so inflation will just absolutely destroy you if you're not invested. So, and the way I look at it is like investors are like people that are in a race where everybody has a car. Some people have fast cars, some people have slow ones, some people have Lamborghinis, some people are driving hoopties. But think about it like this: if you compare the people that are investing, that are driving their different cars. Everybody has a car though. Some nice, some not so nice, but everybody has a car. And then everyone else doesn't have a car. Everyone else is walking. They're on foot. They're trying to run as fast as they can. Right? They're tired. They're running their butts off because they're getting up, going to work, and doing the best they can to succeed. Well, you could be the fastest sprinter on the planet, but you can't keep up with even the slowest car. Yulia Kipchoge broke the world record in the marathon. He ran a 2-hour marathon or something. So he runs, however many miles an hour. Let's say, I don't know if it's 14, 15 miles an hour or something like that. I don't know. But let's say it's 20 miles an hour. I don't think he runs that fast. But let's say it was 20 miles an hour. Well, it's easy for a car to go more than 20 miles an hour. So even Ulit Kipchoge can't keep up with a car. Do you follow what I'm saying? So effectively, when you are trying to build wealth and you are not investing, you are on foot when everyone else is driving the car. That's why the term investment vehicle is an appropriate term to describe investing. You need a vehicle. What is your vehicle? What car are you driving? If you're trying to go from here to California, you need a damn car. You know, stop thinking you can travel on foot. It ain't going to work. Okay. So effectively, or if you try to get there on foot, maybe you'll get there if you don't die in the desert, or whatever, right? So if you want to avoid and you want your kids to avoid being like all these people in this country that work so hard but are so tired and so frustrated, get them investing. Invest consistently. Literally, if I hated investing and I just wanted to build wealth, you know what I would do? I would like take a certain amount of money and every week I would just randomly pick a stock. That's how crazy it sounds. Crazy when I say it. People think I'm full of it. And the only reason I have the confidence to say it this way is because I have a PhD in this. I know what I'm talking about. If you randomly every week just picked the stock and but did it consistently and never sold any of the shares that you bought, just kept your money in your account, and every week just blindfolded, covered your eyes and pointed at the screen and just picked the stock that you grabbed off the screen. That person, if they did that consistently and was putting, say, $50 a week into the market, would have hundreds of thousands of dollars in liquid wealth. That's it. The formula for poverty, it's done. It's over. It's not complicated. So get the kids investing. Get them focus on habits. Like just talk about those basic habits. Just invest consistently. Don't put all your eggs in one basket, and aim for big companies that are, say, in the S&P 500. If you do that, then it's going to work. Another good way to introduce stocks to kids is like do it in the course of life. So whenever we go to McDonald's and I'm thinking about stocks, I'll say, oh yeah, we should own some shares of McDonald's. So I would get on my app, show them, I would buy the shares of McDonald's, and then I would say, now we own a piece of this restaurant. This restaurant we're about to eat at, we're part owners in this company. That's pretty cool. Like kids, that sticks with kids. Or Disney, if they like Disney and they watch all the Disney movies, buy some shares of Disney. And there are companies out there. I don't know. I don't have the names of them anymore. There was one that did it, but I don't know if it does it anymore. But you can actually get the share sent to your house where they have all the Disney characters on it and all that. I saw one of the Black Business School students did that with his daughter, and she was pointing out. She's like, "Oh, that's Ariel. That's the Black Panther, or whatever was on the thing, right?" So those are a couple ideas that can introduce them to stocks without it being stressed out and complicated and everything else. It does not have to be complicated. I promise you. Don't make it complicated. Just do it. Do it. Just do it. All right. So a couple more questions. Let me see here. Okay. So any questions about individual stocks? I will not be able to answer that. Not just because our time is short, but also because I need you to leave the question for me for next week so I can research it for you. If you're a student in the class, just log in at theblackstockmarketprogram.com. There's a link at the top. You can leave that question. Ask me about a stock. I will research that stock, and next week I'll come prepared to talk about the stocks that you ask about. If you ask about it on the fly, I won't know because I got to go research it. What's your preferred platform for trading options? I trade options on E-Trade and Robinhood, but there are other platforms. There's Tasty Trade is not bad. There's Webull isn't terrible. Fidelity is good. Charles Schwab tends to cater more to rich people, but you may want to look into that just to see. I do some stuff with Merrill Lynch. I don't put all my money in one place. I think that's really important, especially now because you have a lot of banking scams happening. I was talking to you guys about this yesterday. The banking scams have gotten really, really bad, especially with AI. And then what they'll do now is they send you a text message saying, do you recognize this transaction? And if the answer is no, then click this link. And when you click the link, they put spyware on your phone. If you say, they'll say text yes or no if you recognize this transaction. If you say no, they'll call you and they'll say, oh, I'm from Bank of America and we wanted to make sure your account was safe and all this other nonsense. So you really have to be extremely careful. And one of the ways to be careful is don't set yourself up where they can take all your money. Put your money, if you have an amount of money you're trying to protect, maybe have a 2 or 3 or 4 accounts is a good way to do it. Because I don't trust any of them. If Robinhood goes bankrupt tomorrow, I don't know what they're going to do with my money. So I don't put all my wealth in Robinhood. No way. All right, so let me see here. Anonymous, let's see. Okay. You lost a lot of money on Alex Rodriguez. Huh. Yeah, I don't know much about EMBK, but yeah, if you put that question in for next week, I promise I can look into it for you. The future of Amazon and Google and the negative advent of AI in these companies. NVIDIA is making processes faster. Yeah, but I just think Amazon and Google are going to make just so much money in AI. If you go to my website, boycewatkins.com, I have a list of AI stocks that I believe are going to do well in the future. NVIDIA has been on that list for a while. And if you got the list, a couple months ago, you could have taken advantage of that big rise in NVIDIA. I'm proud to say that it was actually my son that, or our oldest. I'm his bonus dad. He actually brought NVIDIA to my attention 2 or 3 years ago. So I bought a bunch of shares of NVIDIA just because I was like, yeah, it looks good. Okay, let me buy some. Yeah, so NVIDIA, it just crushed it. NVIDIA made so much money. Is NVIDIA going to keep going up? A lot of analysts believe that it will, but there's a lot to unfold in the AI space. Nobody really knows how this market's really going to play out. It's going to be fun to watch. It's going to be crazy to watch. Okay. Let's see here. Sandy, what's the difference between diversified stocks and a dividend bundle? I've never heard that term dividend bundle. I know what diversified stocks are. It's where you just don't put all your eggs in one basket. I literally, in all my years of my doctoral program, I never heard the term dividend bundle. So let me see what that is. Looking for the term dividend bundle. I don't see a definition for dividend bundle. So I'm guessing maybe it's a bundle of dividend paying stocks or something. Let me see here. We know what dividends are, right? But I can't see anything on dividend bundle. So I apologize. That's the term I'm not familiar with. I can tell you in terms of dividends. Okay, share dividend bundle means a lot, equal to 10,000 shares of common stock purchase. Okay, so it looks like this is something specific to. Yeah, I don't see anything here that's really telling me what dividend bundles are exactly. So I will say with dividends, dividend stocks tend to be companies that are not growing very much, and the reason companies pay dividends is because they have extra cash, and as a shareholder, that cash belongs to you. So as an owner of the company, what you are able to do is to demand that the people who run the company pay a dividend with the extra money that they make. So companies aren't supposed to sit around with a lot of extra cash flow because that belongs to the shareholders. So there are stocks out there that do pay dividends. High growth stocks, tech stocks, stuff like that, those are not typically dividend paying companies, but companies like, I don't know, tobacco companies or liquor companies or really mature companies, I don't know, Exxon or something like that, Chevron, they might pay dividends. They're more likely to pay dividends. Let's see here. How can we teach our kids about options? Just introduce them to options. Let me think here. We don't have an options program for kids yet. We do have our Black Millionaires of Tomorrow program for kids, though. It's a great Black business school for children. If you have kids and you look for something for them to do this summer, feel free to go to blackmillionairesoftomorrow.com. And then blackmillionairesoftomorrow.com, there are a couple things that we have there. We cover real estate, we cover stock market investing and investing in general. Also, there's a program on the fundamentals of money, and there's some stuff on entrepreneurship. And in addition to that, there are self-study exams and different modules they can go through. And at the end, they can get a certificate. And that certificate, it was included as a way to build cultural habits that link to wealth building. So a kid who puts a certificate on their wall next to their football trophies and whatever, they're going to see themselves as a moneymaker, as an investor at an early age. And in our Black financial therapy department, we found that self-identity is huge for Black children because, when I was a kid, I was 12, I got identified as an athlete and a troublemaker at school. So I started behaving in a way other people expected me to behave, when really I could have easily identified myself as an investor or a moneymaker because I like making money. A lot of your little boys, especially that are struggling, that they want to put on medication, I have a heart for them because that was me. They wanted to put me on all kinds of meds and everything else because I was hyperactive. I had energy, I had intelligence, I had creativity. And these teachers don't know what to do with that. So they just put you in the corner or punish you or tell your mama you should be put on meds. And my mother didn't do any of that, thank God, and my father didn't. And so, but what I realized in hindsight was when I made money, my parents didn't have to discipline me anymore. They didn't have to tell me what to do. I did it myself. So a lot of you, that's the transformation I've seen with a lot of children, especially the boys, but the girls too. Girls are built different, right? Sometimes it's easier to kind of get girls to. I think girls just mature faster, right? But with boys, it's like I've seen boys that were getting in trouble in school where they start making money because money breeds status. Money allows them to be the man. It gives them a chance. That's why they play sports, because every boy that plays sports wants to be the captain of the football team. We want to be the starter, a starter on the basketball team. Why? Well, because then everyone looks up to you and the girls like you and all that. Well, having money in your pocket is a great way to also become the man, right? If you're not 6'8", 240 pounds. And so I would encourage you to introduce your kids to money early. And you never know what you're going to create. I've seen kids in that program make more money than their parents. I'm talking about kids making six figures at the age of 14. And it's doable, but you got to open that door for them. So feel free to take a look. We have our Black Business School for Children, blackmillionairesoftomorrow.com. We also have financial flashcards. The website's easy, financialflashcards.com. And we have some workbooks for kids of all grade bands. So feel free to take a look at that. You can go to my website, boycewatkins.com. It's all there too. All right. So let's see. Okay, NVIDIA, is it going to keep going up? Some people think it will, some people don't. Rain asks, the Juneteenth weekend coming up, are you invested in any of the Black-owned companies on the market? Do you recommend any? There aren't a lot of Black-owned companies in the stock market, to be honest with you. I think there was one liquor company or something, and honestly, I don't drink, and I'm not a fan of drugs or alcohol. I'm just not. I just seen too much devastation, too much pain. My father was on drugs, and I had cousins that became alcoholics, and I never saw anything good come from drugs and alcohol in the Black community. I just don't. So I just stay away from that stuff. I don't use it. I don't touch it. I don't want to invest in it. I don't want to be a part of it. In fact, I get mad when the rappers, glorify drug dealing and drug using. And I see all these poor kids just fall into the wayside because they're following bad leaders. You got so many bad role models out here, and we're okay with that because they're making money. White people pay them money to destroy your children. We're okay with that. That's where I get off the bus. That really makes me angry. So forgive me for being opinionated on that, but I don't touch that stuff. All right, so let's see here. Projected price like Chipotle. I don't have a projected price for Chipotle. I just think it's a good company. How many shares should I buy? How many shares you should buy kind of depends on how much money you have. It's really a matter of making sure you just follow the rule of diversifying. Spread your money out. Don't put all your money in one stock. Don't put all your eggs in one basket. That's the most important rule of investing. A couple more questions, three more questions, then I'm done. Aisha, and I see an anonymous question, then I see Terrence. Okay. Aisha asks, Aisha Verzi says, do you think it is necessary to have someone manage your stock account for a fee? I don't think it's necessary, but it can be beneficial. If they charge a fee, charging a fee is not necessarily a bad thing, as long as the fee is reasonable and fair. And the question is, are they adding value? Ways that they can add value. Well, if they are able to help you set up the right diversification structure, and then you're able to sort of talk to them and sort of learn things and pick up things from what they might explain to you. If they're able to maybe manage your money and help you figure out what your net worth is, kind of in a portfolio wealth management capacity, it could be worth the fee. The problem is that the fee obviously eats into your ROI, and people like Warren Buffett are not a fan at all of like managed mutual funds. He thinks that all the management is a waste of time. You should just put your money in index funds because the fees are lower and you're just going to track, the S&P or some other index, and having all that professional management doesn't add value. But that's still mixed because managed funds still pull in billions of dollars every year. But the research when I was at Syracuse, I remember the research seemed to say that index funds were kind of a better way to go. That a lot of people that convince you they can predict which stocks are going to do well, those people are just lying. And when they do predict, a lot of times they're just getting lucky. And so it's like if I told you I could predict whether my coin's going to land heads or tails, and let's say 100 of us are all in a coin flipping contest and we all flip the coin 5 times, well, just from statistics, somebody's going to flip heads 5 times in a row. Somebody's going to flip tails 5 times in a row. That's just because there's so many people flipping coins, right? But that does not mean those people are good at coin flipping. It just means they got lucky. So if you ran that same experiment multiple times, the same people would not be winning every single year. It wouldn't be like you'd have a defending champion at coin flipping that's going to, win the following year. It's not like basketball or something. It's literally luck. So luck is hard to predict. Let's see, a couple more questions. Okay. If you ask me about an individual stock or asset, I won't have that answer for you. Log in at theblackstockmarketprogram.com. Click the link at the top, leave the question for me, and I can answer it for next week. Let's see here. Gregory says, "Hey, Dr. Boyce, I finally sold an option last week. I want to thank you for all your teaching." Good. Well, I'm glad to hear that. I'm happy for you. I'm a realtor and actor in Los Angeles and was wondering if you'd be open to working together on future projects. You know what, Gregory? I'm going to be in Los Angeles in July. So make sure you're connected. Like even if you go to theblackbusinessschool.com, and even if you have a free membership, you're on our email list, and I can let you guys know when I come to LA. So we can meet in person, and I'd be happy to talk about it. Right now, we are a little short staffed. So as much as I'd like to be able to say, yeah, just send the email in, right now with both my parents are a little bit sick, so that's taking up all my time, in addition to like running the company and dealing with others and running my family and all that. So I can't promise anything in terms of time. My time is super short. However, if you catch me at an event, then I'm at the event. I'm, doing my thing. So I'll, if you want to know what events I have coming up, you can also go to my website, boycewatkins.com. Next is Illinois, and then I'll be in Seattle July 8th. And then LA, I think, is the end of July. So maybe we can meet in LA and we can talk, and you can bring in any information. We do make movies and stuff. We don't make a lot of them because they're expensive, but we do have a movie coming out this summer called B1 the Movie, directed by Rick Mathis. And so that's my effort to try to, put my money where my mouth is. All right, when am I coming to NYC? Not anytime soon. We're talking about Brooklyn, maybe in August, but we don't have a date for Brooklyn. And then, of course, there's the convention. That's when everybody gets together. So that's going to be October 20th. You can learn more about that at allblacknationalconvention.com. That's allblacknationalconvention.com. Okay, couple more questions, then we're out of here. Is BBS hiring for any position? Not right now, but when we do, we will let you know. We tend to hire from internal, from the people that already support us. So in fact, everybody that's on our staff is somebody that was once where you are. So we believe in sort of spending our money in the places that where we get our support. So we will at some point make that announcement. The big challenge, honestly, is when you're running, when you're trying to sort of fiercely run, this or develop this institution where you have to walk away from certain money. Money is always something you have to be very conscious about. So, we've been very successful. We've literally we've helped over 10 million people invest for the first time. And I believe we've had a huge impact on the culture and everything else. We want to grow, but growth is something that you have to be very careful about. So just know that when you sign up for something or you buy a book from me or whatever it is that you do, it's helping us to really achieve the mission. And I hope that I'm showing you by being here with you every single day that I'm dedicated to this. I've been doing this every day, consistently, several times a day for 12, 13 years now. So that's what we're trying to do. And when I die, in my will, I've already put in my estate plan that the majority of my wealth is going to go to the Black Business School. We're going to appoint a board of trustees. I'm going to give them all my money and the whole blueprint on everything that we've done to get to where we are. And we're going to build what is going to become a Harvard for Black people. That's the blueprint that we've studied, and that's the blueprint that we're going to stick to. I want us to build a legitimate HBCU. The HBCUs that are out there are good, but they tend to struggle financially because I just really don't think that white people in general really want to create excellent HBCUs. I don't think they have an incentive to do that, and then the mission gets a little bit distracted. I believe deeply in the powernomics philosophy. I believe that we have to own more businesses, not just create more employees. I think that we have to focus on our children and our families. I don't think wealth should be disconnected from culture. When you study wealth, you find that there are some families that just naturally build wealth because they have a wealth building culture. Our problem is that, unfortunately, we've been tainted with a slave culture. So we have to work away from the slave culture and get to a wealth building culture. So unfortunately, the challenge for you is that we've got a lot of homework to do, and the more homework you do, the more you can sort of pass that down to kids and grandkids, and then they can really do the real work. They're the ones who are really going to take things to the next level. We're just here to plant a couple seeds and get them on the right path. All right. So last question. Terrence says, what's the best approach to getting family members to start an investment account for their children without offending them? You can make the suggestion. That's it. You can just tell them what I said, maybe send them a short link to a short clip that maybe from a class or a video I've done that might help. Um, I will say this too. My wife, I think, will agree with this. My wife's a therapist, and one thing she's consistently said is that you can't change people who don't want to change. Um, I don't know if that's 100% true because I've seen people persuade and all that, and I know a little bit about persuasion, but I just think if somebody's not really ready or they're not into it the way you are, um, you got to be real careful about not letting their lack of vision taint your own spirit. Like, you got to put that mask on yourself first before you start trying to save the other passengers on the airplane, because the airplane is going down. The Black community's plane is going down. It's especially in the wealth category. America's plane is going down in terms of wealth category. So put the oxygen mask on yourself first. Um, and then the good thing though is that once you've saved yourself, then you do have a greater ability to save other people, right? You've accumulated wealth in your family with your business and everything else. Well, now you have wealth, and money is power. So you then have the ability to influence the actions of others. For example, I'll give you a perfect example in my own house. I can really get the kids to really listen to me when I talk about wealth and all that. They in fact, the internet, there are corners of the internet that called me a simp because when I married my wife, she had 3 kids. And I'm a weirdo because I love these kids and I love raising the kids and I consider it an honor to help raise the kids. But those are not my biological kids. So there's a bridge to build in terms of forming the connection where they trust me and know that I have their best interest at heart. It took a long time to build that bridge. Well, here's the thing. I I'm deeply devoted to and committed to the idea that if you get kids interested in wealth at an early age, those kids are going to just have far greater likelihood of being wealthy. I know this. The data supports this. This is what I do. But that doesn't mean they're going to believe me if I say this to them, right? Especially, I'm their bonus dad. I'm not their biological dad. So what did that mean? Well, you know what that meant? That meant that my goal in life has always been to be, my wife jokingly calls me the juggernaut. She says, all throughout your entire life, every place you've ever been was never the same when you left it than it was when you got there, right? At University of Kentucky, I had the highest grade point average, but I was the most outspoken student. So I just really had this energy, right? Because I just, believed in what I was doing, and people never forgot. 20 years later, people were like, yeah, I remember you on campus and you were something else. The same thing happens when I do stuff here. So what I did was I said, I'm not going to really spend a lot of time preaching at them. I'm not gonna ruin the relationship by forcing ideas onto them. You know what I'm gonna do? I'm just gonna let my light shine. So you know what? I have an office. I built a man cave, and I got the basement finished, and I built a little man cave where I watch my sports in the other room. But I also have my office over here. And so every day, the kids would be doing whatever they're doing, and they would hear me in here screaming about Black power and powernomics and Black wealth and everything else, right? And then they're going places, and they're seeing people walk up and say, Dr. Boyce, I know you, Dr. Boyce. And they're like, why do people care who this guy is? So that's happening, right? And then there's like times where they'll hear me on the phone talking to people about these sorts of issues, right? And I knew subconsciously this was going to seep in. This was going to become part of just, okay, that's just what Boyce is doing. That's what's happening in this house. So one day it gets to the point where they're getting older and they're like, I want to go make some money. So it's like, okay, yeah, you could go get a job at McDonald's or Chipotle, or you can come work with me. And here's how much I'll pay you. I'll pay you more. And this is what I'll show you. And then so they're like, oh, I want to come and work with him. Because by that time the trust is built. And then they're shipping books out and they're looking at the titles of the books. How to become how to think like a millionaire, Black American money, the new Black power, the 10 commandments of Black economic power, right? They're seeing all this, right? So they're kind of being immersed in the culture. It's like if somebody's convincing me to become a rapper and they just have me come work in the studio, and all I'm doing is I'm hearing rap beats and I'm seeing rappers like flowing and I'm getting into it. Well, eventually it's just going to kind of sink into my skin, into my DNA, right? So effectively, I already know that the kids in this house are on a different economic trajectory because I'm here than they would have been if I wasn't here. Because I also believe that again, I hope you'll forgive me because I know we're done talking about the financial stuff, but I want to give you some real life stuff that relates to the economics and a real life example to help you kind of figure out how to influence and persuade the people around you, because that's your job, really. To some extent, I really, if you've bought into this, it is partly your job to have enough energy and confidence to bring a new culture into a space where there's toxic culture. So effectively, with these kids, it's like I didn't really ever really force them to sit down and listen to me. I just showed them what I was all about. And I was going hard at it, and they saw the success. They saw the impact. Eventually they came to the All Black National Convention. They sucked in all that energy. And we never really had to have a formal conversation saying, well, it's important to invest. The only time we had that conversation, I told you the other day, the 16-year-old, I did say to her, I said, a smart woman makes her own money, but she also invests her money and saves her money, so that way she's not, dependent on somebody else to pay her bills. She doesn't have to date some terrible man just so she can get the rent paid, and she heard this, right? Because it was something where she's like, yeah, that makes sense. Right. So what I would say to you is like, just do you first, right? Do what you do it hard, talk about it, be about it, live it. And then other people will just sort of see it and they'll take in the pieces that work for them. And the thing about money is that money is a beautiful thing to promote to other people, because all people think about and talk about all day is money. Promoting money to your family is like promoting sex. Everybody likes sex. And if you don't, then you should go get checked out at a doctor because something might be wrong. But literally, money's easy. But the weird thing is that we go about it just so the wrong way. Like, if money is so important to you, then why wouldn't you spend time learning how to get it? Well, because there's a disconnect, right? We don't. It's the same reason that, for example, when so many of us die of heart disease, strokes, obesity, and diabetes, nobody wants that, right? Nobody wants that, but there's something in the culture that incentivizes us to do the things that lead to that outcome. So, like, nobody really wants to be broke, but you got to sort of work backward and look at the culture and say, what activities are we engaging in or not engaging in that's causing us to be financially stressed out and broke. Right? So I hope that helps. Don't go preaching to other people and making them get mad at you and all that. Just offer to help. And then at some point when they see you doing well, they're gonna definitely want to talk to you. And they may show up just to borrow money from you, but money is power. So literally, when I have a relative who doesn't listen, who wants to borrow money from me, I either say no, or I say, I'll loan you money, but you need to listen to me now, because clearly your plan ain't working. Clearly whatever you're doing ain't working. What I'm doing is obviously working. That's why you're borrowing money from me. So we're gonna have a talk. Now I'm about to preach to you. That's the trade-off. So those might be some ideas that can help you. You can't save everybody though. Some people, their kids will learn in the next generation or something. Some people just, I don't know. People are different. All right. So anyway, it was good talking to everybody. I hope you had a great day. I hope that you benefit from this discussion. I hope that this helps you become wealthier and smarter and happier and everything else. We're going to do this again next week, next Tuesday at 11 a.m. Eastern. So join us again in class. And again, if you want to meet up in Illinois or Seattle, those events are on my website, boycewatkins.com. Also, the $5 a day investing plans at boycewatkins.com. My book, The 10 Commandments of Black Economic Power, is there. Also, that training, How to Make Money Without Working. If you want to dig into stock options a little bit more, there's some resources there too. So have a great day, everybody. God bless you.